Comair has just released its interim results for the 6 months ending 31 December. Generally, performance much in line with the prior year 6 months. We did see about a 5% improvement in revenue, 3% of that coming from higher airfares and 2% from additional occupancy on the aircraft. The oil price had a benefit to us of around 100 million rand, but the exchange rate had a negative impact of 160 million. So overall, the effect was about a 2% increase in operating cost. Obviously, that exchange rate impact very significant to 48% of our cost structure being dollar and pound based. Generally, earnings per share up from about 34 cents a share to 37 cents a share. Turnover up to 3.1 billion. And the other big issues for the half year have obviously been the fleet upgrade program. We're heading towards the end of the retirement of our Boeing 737-300 fleet, 3 aircraft left, which will be out by the end of the year. And those were replaced firstly with another 737-800 in the British Airways fleet. And then we also acquired 3 aircraft that we had on lease previously. And so yes, constantly upgrading and moving into more efficient aircraft. And it makes a big difference. There's a lot of talk about the huge benefit of the current oil price. We're already seeing that the projected oil price for the balance of the year is sitting at around $75 a barrel. So it's all now going to come down to the issue of where the exchange rate goes, as to whether we end up with a net benefit for the full year or whether the exchange rate offsets the oil price benefit. We're already seeing some decline in airfares with the pressure from a lot of new competitors talking about moving into the market. So we'll have to see where that develops. But overall, looking reasonably good for the balance of the year. Again, obviously subject to where the oil price and where the exchange rates go.